A Times Influence initiative.
Many people get serious about retirement planning only when they reach their 50s. It's like running a marathon and getting serious about winning when you enter the last mile. But investors who take the right steps early on can effortlessly reach the finish line. In fact, even the stragglers can secure a decent place in the race if they make the right adjustments in time. On this episode of Nivesh, we meet some individuals who are preparing for retirement, and we talk to them about how they can invest their hard-earned money to create the ideal corpus for a comfortable retired life.
When I make an investment or something, I study it completely. Only when I'm convinced do I really put my money in there.
Subject to market, that's the only thing I know. Nothing else. So even share bazaar and all, I have never been into it.
I should know more about mutual funds because there are still a few questions that I need clarified. So I am guessing that that'll get answered.
I'm absolutely layman as far as the finance sector is concerned. Never been sitting with any financial planner as such who can go back and decide.
Transitioning into retirement mode can be an exciting phase of one's life, but at the same time, it can be a bit challenging and even emotional. You know, to live the idyllic retirement life, it's really important for one to set out their personal goals and their financial goals as early as possible. Hello and welcome to the Association of Mutual Funds in India and Times Network present Nivesh, a pan-India investor education initiative that aims to guide every Indian on how they can invest their hard-earned money better. On this episode, I'm joined by two financial experts who will help me guide our lovely guests here on how they can get the best bang out of the buck of their hard-earned money and prepare for their life, their retirement life, and achieve all their goals that they have in mind. First up, let me introduce my two experts to you. First up, we have PR Dilip. He's the MD at Impetus Wealth Management. Welcome to the show, Dilip.
Thank you. Thank you.
And we have Mukund Sheshadri. He's the Senior Partner at MS Ventures Financial Planners. Thank you, Mukund. Thank you, Dilip, for coming on the show. Let's go over to our guests and hear from them. Hi Ranjiv, tell us a little bit about yourself and what are some of your financial aspirations?
Hi, I'm Ranjiv J. Kapoor. I'm a filmmaker, photographer. Retirement doesn't feature in my dictionary, and especially for a photographer, filmmaker. We want to die standing. We've achieved the basic goals of life, roti, kapda, makan. So life is beyond that. Our goals are basically travel. We love traveling as a family, my wife and my daughter. And like I said, we go to a new place once a year, and around the world. And then, of course, education for my daughter was another goal to be achieved. She studied in Canada at the UBC, so that was a big goal. Now that she's graduated, so the next big thing for us is the wedding. We want to, achieve that. Like mutual funds is a very important, area, for us to invest in. My daughter, me, my wife, we do that, and we have some, decent investments in that,
Dilip, if you want to come in and guide Ranjiv.
Retirement was a peaceful event where you could actually plan your retirement. Your family could be prepared for it. You would have enough time to make adjustments for the retirement. But today, after the technology invasion, what has happened is the medical field, the advancement in the medical field has expanded your lifespan, but advancement in the technology field has actually shrunk the retirement age. I would say that when it is about such goals like leisure or a once in a year travel, you could actually earmark certain amount for that and invest that in aggressive assets. okay, like direct equity products, or maybe a hybrid where equity is more. And for the second goal, like marriage of a child, there you need to be more conservative. There the asset allocation can be more conservative. So in this manner, you can actually have a beautiful basket.
Lovely, lovely. Thank you. Shalini, can we go on to you? Shalini, tell us a little bit about yourself and what are some of your financial dreams?
Shalini Vidhani here, and I've been in stock market for almost 22 years now. The field that I have chosen, there is no retirement as such. So I'm going to be working. I would rather like to be working till I'm there, till I'm alive. Don't want to give up on that at all. As for aspirations, I love to travel. I want to fulfill all those. Then my sons, they are looking forward to a destination wedding as the trend is these days. So all those expenses I need to compensate from this market. So that's what I'm looking forward to. The investment that I'm doing in the stock market as well as in the mutual fund, it's giving me a steady income to go in for the holidays as well as for the destination weddings or any other future education plans. I have a steady growth of funds going on in the mutual funds. So that's helping me a lot. It gives me a lot of relaxation to know that I have a chunk of fund standing behind me to cover all the expenses.
Mukund, you want to come in on this?
Okay, so I wish this comes true very soon. So the thing is, in any goal, let it be a son's wedding or a holiday or a cruise holiday or something, there are three aspects which are most important. One is the priority of the goal, the quantum of the goal, and the tenure of the goal. Correct? So what is the priority? This is what you and your family decide, that every year, or as Mr. Rajiv also spoke about, as for every year or things like that, where exactly am I, how much is, how important it is for me to have that kind of a wedding or something like that, because every goal comes at a cost of another goal. Sure. So that is priority. Second thing is quantum. Now let's most importantly understand, in every goal there is inflation. So if I need to go to the cruise in 2018 vis-a-vis 2023, there's going to be a major difference in that. So inflation has to be factored in. Now the most important thing is, if the goal, the wedding or the tour which we are planning is coming in the short term or a nearer term, then we cannot be taking much of chances with some kind of a fund which can go volatile. Right. Correct? So it cannot be, as Dilip also put it across, that if supposing I invest in a particular fund which is very, very volatile and my trip is in the next 6 months, then the destination of trip shouldn't change from international to national. So in that case, what needs to be done is, you need to plan it year by year. So what we always suggest is, if I have a goal in 2018, 19, 20, going up till 2028, I first need to see the priority. Of course, it's important. Second is the quantum. Assuming I keep the same quantum every year also, with inflation that is going to change. And second thing is the goals which are coming in the nearer term. Obviously, the kind of funds I would be investing will be more oriented to less volatility. And the ones which are in the further away, which is about a 7-year or a 10-year or a 15-year thing, I can go in a little aggressive, because the kind of exponential return I would get there will be much higher compared to this. So in this way, the entire cash flow can be designed, okay, and this can be easily achieved.
All right, let's move on. Ketan, tell us a little bit about yourself and your plans.
My name is Ketan Adia, and I'm from the media industry. I'm an editor and I'm also a producer. My idea of good retirement is actually, I had planned to retire at the age of 50 or something. I wanted to earn enough money, and I wanted to travel. I had planned to have a relaxed life, but it has not happened. I've already crossed 50. Now my target is 60. So I'm hoping to retire by 60, and after retirement, I just want to live a relaxed life. I want to enjoy my evening drink with some music, some television, and occasionally travel. I have not planned much, because we in creative field, we are not that money minded or that. We are more into this filmmaking, and also there are no plans as such except for making money and saving and all that, and maximum what we think about is FDs and all, but further we don't have that idea and all that.
Dilip, you want to come in?
Yeah, retirement, when we talk about retirement, retirement is never a complete retirement today.
Right.
Okay, every individual has some hobby, some passion, which he may not have pursued during his actual career phase. And this hobby or passion could be actually converted into a cash flow generating business when you're actually in a retired mode. So what are you doing? You are in a retired mode, but there is a semi-activity which you are passionate about and which is creating cash flow,
Correct.
which can actually support you in your day-to-day activities or foreign trips or some other leisurely activities. So one need to actually look at that individual's entire profile, including his hobbies and passion also. Because when you look at the asset of an individual, when you look into the fixed asset, financial assets, you look at the conventional assets. I would want you to look at your non-conventional asset also, which is what is your creative instinct, what is your hobby. You don't have to get into a complete retirement mode because unfortunately what the medical field has done is that the life expectancy has gone up so much, and more than 50% of senior citizens in this country are surviving living based on either borrowed capital or dependent on the family members, which is a very pathetic situation. According to me, retirement planning is the most important investment planning required in this country.
On that note, it's time for a very short break. Don't go anywhere. You're watching the Association of Mutual Funds in India and Times Network present Jan Nivesh. We'll be right back. Welcome back. You're watching Association of Mutual Funds in India and Times Network present Jan Nivesh. We're in conversation with some stellar guests and we're talking to them about their financial aspirations and their dreams for the way ahead. So let's move on to Hemant. Hemant, tell us a little bit about yourself and what are some of your plans for the way ahead.
I'm Dr. Hemant Dugad. I am a gynecologist. I am practicing since last 33 years. I have my own hospital. I'm already semi-retired, and the majority of the advice what comes now is that whether you are in stocks or you are in mutual funds or you are into any investment, you have to give a period. Now I am at 60. Am I too late for all this? So now what next? Because I have my responsibility that one, my remaining life at the same standard what I am, and daughter's marriage. These are the two major things for which my planning revolves around. And what I have done is my major investment, or you can say savings, is into FD. Main thing is that can somebody think or plan at 60 for a very near goal?
So Mukund, I'll come to you for this.
One is thanks to your fraternity that it's not too late because you have increased our average mortality age. So the thing is, yes, obviously if things are started early, it has its own benefits and there is a compounding, but that doesn't mean it is late, because there are so many kinds of products now available, or various solutions rather, let me put it that way, which are available for various age groups at various points of time. And the second one was
daughter's marriage.
Yes, daughter's marriage. First step, as I said, is involve your family and you be clear about it. So the first thing is, so I always suggest that whenever you make your goals or whenever you make anything, please write it down. Generally what happens is there is a research which says that we get thousands of thoughts a day. You know, whatever we discuss today, probably by Monday you would forget it. Correct? So it's better to write it down. So you make a goal book or something like that with your family and saying that this is the amount of money I'm expecting to spend over this much time. Now, minute you get this clarity, automatically you start the reverse calculation in terms of how much is the amount which would be needed and what is the kind of solutions you will be able to go ahead and do it. If it is for a longer point of time, much more than maybe 5 years or 6 years in terms of the marriage or things like that, at that point of time, then probably a debt fund or an FD might not be that good an option compared to something else. But there you have to see your risk taking ability as well as the total profiling which you have to do. So once you go from that particular step, you can actually construct a plan, and then as you rightly said, you know, you are from a different field, you can probably take a help of an advisor or a planner or somebody and just try and understand that if this is the kind of corpus, what is the kind of investments I need to make from today, and it can actually bridge well.
Dilip, there are a couple of products that are offered by mutual fund companies which are called equity savings funds, equity value funds and retirement funds. What are these products and who would they be suited for?
Talking about equity savings fund, this is actually again a hybrid fund where almost 65% would be invested in equity and equity related instruments, and balance would be invested in debt. It's a conservative product. You can't expect an equity savings fund to perform the way a pure equity fund performs. This is actually good for a conservative investor. And then you have value funds. As the name signifies, there are different kinds of investment strategies. So when you talk about value investing, it is about if something is available at a discount to the intrinsic value. If something is actually worth 100 rupees, it is available at 50 for whatever reason, you buy that and hold on. That's value investment. Where it is conservative, it is not a very aggressive strategy, but it will actually pay in the long run. Retirement fund, I think it was launched almost 15 years back by one of the leading institutions, but it's never caught up because almost 50% of this investment would be in debt. So a young investor who wants to plan a retirement is not very happy with the returns because he has a tendency to take higher risk, and he also wants to do a pension planning. So if he has chosen this, he's comparing the returns then.
Thank you so much, Dilip. Thank you so much, Mukund. But before I let you go, I'd request you to please draw out a very basic financial roadmap, some kind of salient points that you've already spoken about to kind of guide them on the way ahead. Thanks, Dilip. Thanks for that, Mukund. Dilip, if you could first read out your guidance for Rajiv.
Yeah, Mr. Rajiv, your investments are already locked up in fixed asset, which you need to release by the time. So even if the event is happening out of 5 years, if you have earmarked certain asset for that particular purpose, because the amount involved is large, you could actually start thinking about liquidating that, deploying that in a financial asset, where it is not very volatile, but still can give you better return than a savings account and the real estate growth, and then use that when that event happens. So you have already made the provision for it. For the second goal of your international tour, I think it is a relatively much smaller amount. So you should actually start investing. If it is happening within a year, as Mukund was rightly saying, you should put money in the liquid funds. But anything beyond 2 years, you should actually put it in aggressive, growth-oriented investments. When you talk about relaxed retired life, he is already a creative person. He is a creative person, so he can, in a very relaxed manner, he can, increase his cash flow by converting this passion into a part-time profession. So your retirement can be more enjoyable. And as far as travel is concerned, that again depend if you actually identify and quantify where you want to travel and how much money you want to spend, then your present financial assets can be reallocated to meet those goals. Because there are investments which are for short term, for medium term, from long term. Okay, so for each goal we can have a different basket of investments which will actually meet your requirements going forward.
Fantastic. So let's move on to Mukund. Mukund, if you could first guide Shalini. And
yes,
then
Shalini. So the first thing is international holiday, I presume, is going to be every year. Wedding is going to be a one-time event. Two times event. So there are 2 children. So one is you have to plan in terms of the approximate time when this is going to come. So the first is the time horizon. Second is what is the approximate amount of money in today's cost, what you plan to spend. So for that you will have to adjust it with inflation, understanding the tenure, as I said. In terms of holidays, the inflation calculation has to be a little more detailed because it will have to be year on year. Correct? So take every holiday year as a separate goal and then choose the products. As I mentioned previously also, if the goals are near term, it has to be more from a debt perspective where we can't take much of a risk in the picture. When it is more long term, which is a 5-year, 7-year, 10-year tenure, then equity can be looked at in the proportion which you are comfortable in terms of your risk taking ability.
Super.
Yeah?
Thank you so much.
And now for Dr. Hemant.
So one for daughter's wedding is something very similar to what I gave it for her. So one is please involve family, including your daughter. Right? So understand that how much money we are actually willing to spend on this and take everybody's consensus in the same. Okay, once that is understood, then you understand what is the tenure which you plan to spend, when you would need this money, and then on the basis of that we would need to calculate. Coming to medical facility, this is one of the most crucial things which has to be there in everybody's plan. So the first and foremost thing is, do you have a proper medical insurance? If you have a proper medical insurance, whom is it covering and to what extent? And you yourself being in the fraternity, you would understand whether how much of this money makes sense. The best way to understand, there is no fixed formula, but if tomorrow given a choice, you're asked to get admitted in an hospital, which one would you go to? And then your contingency fund has to be divided. So some part could be in fixed deposits, the way you have kept it. Some could be in liquid, could be in liquid plus, and other kinds of things as a combination of a safe and secure and liquid instruments, so that this can be removed at any point of time.
Thank you so much, Dilip. Thank you so much, Mukund, for coming here. Thank you, everyone, for being here and for taking our time. And I hope that these guidance that they're giving you will be helpful and you will work on that. Of course, do visit the website Mutual Fund Sahi Hai for more information. I'd also urge you to join the Jan Nivesh movement, where we are asking people to pledge to invest their one day's income per month into mutual funds for long-term benefit. That's right, you too can join the Jan Nivesh movement. All you need to do is give a missed call on 1-800-833-666 or visit our website jannivesh.in and pledge to invest your one day's income into mutual funds every month. That's all on this episode. We'll see you next time with another set of guests. Thank you so much for watching, and remember to stay invested. Thank you.
So imagine if such well-established people are also were deprived of such knowledge. Imagine about the people across the country, length and breadth. So awareness about mutual funds, how to deploy your resources prudently based on your financial goals, how to identify the financial goals and how to quantify them. Once those two things are done, then it is easy to actually make an asset allocation.
The most important thing is this is being done probably for the first time at this level, in terms of people being called, and it's like a real life case which is happening on camera. So which is a fantastic initiative by AMFI and by ET now, because this is going to have far reaching consequences in terms of people's literacy as well as people being able to manage their finances much better.
What I understood is that I'm still not late, and I can still sit down and the involvement of the family.
I was already in the field, but I now have a better knowledge. I have better knowledge about liquid funds, so that's been an eye-opener. And now I have much more refined approach to stock market, to mutual funds.
After what I have understood today and what I have learned and the insights that I have got with the two experts were really enlightening.
Today we came to know that through good channel, proper advice, and mutual funds are much better for future planning.
I pledge to invest in mutual fund.
I pledge to keep investing in mutual funds.
I pledge to keep on investing in mutual funds.
I pledge to invest in mutual funds.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Times Influence Initiative.